Those of you on Facebook and YouTube, hope you can see me as well. Those of you on GoToWebinar, I can't have the webcam on, unfortunately, but you can. Hopefully, you can hear me loud and clear as well over on GoToWebinar. So today we've got some live analysis. It's obviously all about you guys. We'll talk about what you want to talk about. I'll go through the up and coming or the data we've had already this week, which has been particularly interesting. Two interesting loads of inflation data out of the US and the UK so far this week. Plenty of data still to come. We've got retail sales later this afternoon out of the US as well. Lots of Fed speak, lots of other central bankers speaking this week. So hopefully you can hear me loud and clear. Thalani, Samuel, Ernest over on GoToWebinar, please see if you can hear me. Emma, Mohammed, you're always first thing. Good morning, Mohammed. Good morning to you. Good afternoon to you as well. So let's just run through the slides first, and then we'll get to what you guys want to have a look at. So Mohammed, Majid, good morning, good afternoon. Let's crack on, shall we? So I say hopefully everybody can hear me okay over on GoToWebinar. So obviously trading is risky, guys, and it's all about managing that risk, as we talked about. Mohammed will, I don't know, 1780 for gold. Let's have a look at it later on. S&P 500, Dow, yeah, interesting moves on that. Very volatile CPI data later on, but more on that in a minute. As I say, trading is risky. Trading CFDs is risky as well, particularly risky. So watch the leverage, watch your understanding of derivative products, and always, manage your risk. As I say every week, well, more than every week, this business is about yourself. It's about understanding yourself. It's about accepting risk. It's accepting losing. It's being able to cope with winning as well. Adele, thank you for that, sir. Hope you can hear me well. Good morning, Nigeria. Samuel, hope you're well. Yeah, it's still morning in Nigeria, isn't it? You cannot hear me. Okay. Anybody else on GoToWebinar can't hear me? And Samuel's saying he can't hear me. I'm actually, somebody, Andrew's telling me I'm muted. Oh, there we are. Sorry, I was muted. Samuel, thank you for that. Hopefully you can hear me now. I had the microphone switched off. Samuel, thank you for that. You can go top of the class for pointing it out. Now, loud and clear now. Very good. So welcome, everyone. As I was saying, trading is very much, for me, a probability exercise, something you've got to keep simple. And psychological exercise. Know yourself more than anything to move forward in business. Joseph, thank you for your very kind comments. I love you people. Very good. Judith can hear me on YouTube, so that's great. So welcome, everyone. We're going to go through the main news we've had already this week. What's still to come? Anything, obviously, you want me to have a look at on your behalf? Any comments you've got, like Mohammed C is saying... He's saying, let me just see, let's share that with everybody. Hi, sir, gold 1780, gold going down. So we'll see. We'll have a look at that when we look at the chart. So anything else anybody wants to have a look at, please stick it in the box. Those of you on GoToWebinar, stick it in the question box. And, you put the time scale you're interested in as well. If not, we'll default to the daily time frame and then pivot around that, excuse the pun. Pivot very much a point of focus for markets at the moment. After the central banks pivoted, has inflation topped out? Are they going higher with their interest rates? Well, the key number yesterday was not necessarily that core number we can see there at the top of that slide, where 5.6%. It was the headline coming down to 6.4% in the US. Better than expected, but the monthly data was hotter than expected, and the services component in particular is still rising. Services accounts for 4.1% of the inflation in the United States, and it's still rising. It hasn't topped out. A lot of the other inflation, goods inflation, has rolled over, and so we got this very, very volatile day yesterday. Well, volatile in recent terms. We had the dollar up, we had the dollar down, obviously followed through to where sterling, yen, and gold were moving yesterday, filtered through to the Bitcoin as well, cryptocurrencies, and also obviously stock markets. Not many of you ask about the stock markets. I know Emma's a big stock trader, but yeah, we had a very, very significant move. I'll get to all your questions once I've just run through these few slides, guys. So do bear with me for the next 10 minutes or so, or 5 minutes or so. So overnight as well, we had the RBA. I don't know many of you trade in the Aussie dollar, but that sank very aggressively against the US dollar overnight. Big, nice trending move down this morning. On dovish comments. Dovish comments means that he's not as aggressive as they're going. Perhaps they're going to be. He did say in testimony to the Australian government, he did say that that rate hikes aren't over. The top, I don't know where the top's going to go. So that should have been bullish for the Australian dollar, but his outlook was quite gloomy, and so it's taken very dovishly, and the Aussie dollar sank on that comment this morning. This also at the beginning of the European session, we've just had the CPI data, the inflation data from the UK Consumer Price Index came in better than expected at 10.1%, but it's still 10.1%, still 10%. So every pound you're spending, it's going. You're only getting your purchasing power is much less than it was a few years ago in the UK. So consumers, workers, all feeling it quite strongly in the UK. It is better than expected, as I say, 3.10 compared to 10.1%. But the monthly number was also pretty sticky as well. So just like the US, things like rent and rates proving quite sticky in the UK as well. But the Bank of England continued to say they're expecting to come down quite quickly, but that's putting pressure on them to act further with rate hikes further out into the year. Retail sales from the US is the big data we're expecting later on this afternoon. We've got a speech from Miss Lagarde. She probably won't budge from the rhetoric that there's more hikes to come from the ECB. I don't think she's actually talking about that today, but any comments about monetary policy will obviously have an impact on the euro later on this afternoon. Jobs from Australia tomorrow, following the hawkish, the dovish tones that the head of the RBA took this morning, and the Aussie dollar. See what that looks like. Expected a bounce back for January of 20,000 from a decline in December of 14,000. Unemployment rate still historically very low in Australia, as it is around the world, but it's not helping the outlook. And Mr. Lowe rounds off the week on Friday. Next week, we're still in the middle of earnings season as well. We had some big companies reporting earnings this morning. Barclays Bank was the outstanding one, or standout one for me this morning, down 9% at one point. I think it might even, I don't know if it's bounced off that low, but under 170. Barclays shares on a weak earnings out and a weak outlook as well. Big hammered on the stock market. Anybody trade stocks? It's where I started. It's where many people start before the days of before you could trade forex simply. Community services. Good afternoon to you. Good morning. We'll get to your questions, guys. So don't worry. Next week, as I say, lots of earnings. We've got on Monday, Tuesday. We've got the big retailers in the US. We've got Walmart and Home Depot, I should say, reporting as well. We got the over the weekend. We got the Bank of China, Central Bank of China, unlikely to change 3.65%. That's unlikely to move. PMIs start to kick off again next week, and we finish the week next week with the RBNZ, first of the central banks, or the next central bank to report overnight on Wednesday the 22nd, and minutes later on that day from the FOMC. Still very fundamental what was said, who said what for the minutes. Or some two big events. Wednesday 22nd is our the big day next week, and then we've got the first reading of second reading of US GDP on the 23rd as well. So plenty to come next week, but lots going on this week as well. So let's get to your charts. Let's get to your charts. Oh, where's my I'm just stuck on the stocks here. This is the Barclays. You see that this is the daily chart for Barclays, rallying quite nicely through January. Stalled at the beginning of December here. Bit of a heads up that the rally was over earlier in the week, and then a big move down today. Big 8-9% decline in Barclays. So let's get to what you can here. Anybody on GoToWebinar got any requests for any assets? Because they're all coming in on YouTube. So let's have a look at my YouTube friends. I think Mohammed was first up. In fact, he wasn't. It was Hassan that was asking about gold. Good afternoon, Hassan. Hope you're well, my friend. Gold. Mohammed was talking about gold as well. Remember that 1870 level. So let's have a look at our gold charts. Which what profile should we use today? White charts, black charts. Let's. There's been a vote for white charts recently, so let's go back to my white charts here. Or white background charts, so not white charts, but white background charts. So gold on the hour time frame. So let me just get that. There we are. Hope you can see that, everyone. Hope you can see that loud and clear on, or hear loud and clear as well on the GoToWebinar site. You're all very quiet over there. Our YouTube guys are all got lots to say. So let me just go to the daily. So this is daily for the gold chart. So we had this big rally to that 1950 area, even 1960 intraday at the beginning of the month. And since then, we've rolled over. We've been in the under half of the Bollinger Band on a daily basis. Second big down day following the first big down day shook us out last week, and we've moved down since. And then we've broken under. Let me zoom this up. We've broken under the key 50-day moving average. This blue line here is the 50-day simple moving average. The green line, the midline of the Bollinger Band, represents a 20-day simple moving average. So we've in the second half of the Bollinger Band, consolidated for a few days. Then we've broken under the 50-day. Bit of a doji candle yesterday on the spike of the inflation data. We went back up to 1860, but closed the day positively, but very minorly positive. And then we're big down day today. And as you can see, the reason I've it zoomed in on this, you can see that the MACD histogram is now ticking under. Is now gone negative. Went negative yesterday, flat the day before. Went negative yesterday, and much more negative today. So we're moving down. The oscillator here, percentage R on this particular chart, is suggesting it's oversold, but it's been oversold according to percentage R here all of February. So we're moving down. It has moved down. So MACD has rolled over. The signal line's been descending, obviously, from the beginning of February, and it's continued to be the case. And we're currently trading at 1834 on a current end of day base, so we're down. So 4-hour chart remains weak. There we go. We've been in the under half of the Bollinger Band since the big shakeout last week, and we continue to decline. And the 1-hour time frame is also having consolidated a little bit. We continue to decline. There's yesterday's hiatus of the CPI data. So we went higher here to test the 1870 level, key 1870 level yesterday. Then we went after that we went down to test 1843, and more importantly, or just for importantly for today, we finished we stayed here under the 20 and the 50-hour moving averages. We peaked above them this morning. We turned around here at 4 o'clock, and we've been lower ever since today. So we're poked out of the Bollinger Band at 9 o'clock on the European Open, and we're consolidating down here at 1835 zone. So that's very much a negative setup. And you see here the signal line here is we were consolidating last couple of days, just wasn't going anywhere, and then we got a direction today. RSI is oversold or into the oversold area at 27. So 1834 is where we are at the moment. Where do we go from here is obviously what everybody wants to know. And we don't know, do we? Where are we going to go? Let me just change the colors of those lines so you can see them. What have I put in there? It's 1 hour. So let's make it dark blue. Okay, so there's our downline close. 18. I said 1835. Don't I? It's really we're under 1835. So 1830 becomes the next line in the sand, which isn't far away at all, is it? So gold's trending lower. At the moment, say daily, where does that take us? So 1830 is our support, takes us back into the beginning of January, and then below that is the big, thick 1800 level. This 1800 level, $30 below where we are at the moment, is the next key support area. So 1830 needs to hold today. If we're not going to go lower, but the trend here on the daily chart and on the hourly chart remains to the downside. That's gold, my friend. Let me just see what Mohammed was asking about. 1780 going down gold. So, well, you know, it's certainly not out of the question, as we said. I think you were talking about the other way around last time, weren't we, Mohammed? You were talking about to the upside, but certainly there's 1800. Next line I've got on here is 1725, but the 200-day moving average is very flat, very horizontal. It sits at 1775. So 1775 is the next big support area. So certainly your 1780 target, Mohammed, is far from out of the question on an end of day basis. Emma, good afternoon. Hope you're well. Dow and the S&P. I think, did you put something about here about somewhere else? Did you write something else? There we are. I'll come back to you. S&P 500 on a fundamental analysis. Right, well, a fundamental analysis, remember what they are, everyone. The S&P 500 is 500 of the US's biggest economies, biggest companies, okay? It's a big, broad measure of what is going on in the US economy. That's why it's the world's most important stock market. Okay, so the US 500 at the moment, obviously it's not open. Here's the futures market, the US 500.F, and clearly you can see here it's still ticking, it's still rising, isn't it? We're in the upper half of the Bollinger Band here, excuse all the lines on there, but you can see we're still moving higher. The key three lines on here, the 20-day, the 50-day, and the 200-day, the gold line is 200, the blue line is the 50-day moving average, and the green line, the midline of the Bollinger Band, is the 20-day moving average. So we've been down to test the 20-day. The 50 is still there, and the 200 is there. So it's still relatively bid, but we've consolidated, haven't we? We've got to the key resistance, 4175. 4175 is a key resistance area that the S&P 500 here on the futures market needs to break over if we're going to go higher. So there we are, zoom it in. So 4175 is the real resistance to the upside. As you can see, we haven't closed over it on an end of day basis. We have closed over the 4150 level, but only for 1-2 days. Other days we've been over it, but we haven't been able to hold it. So 4150 less of resistance. The big upside support, flipping it now, is this 4100 level. So 4100 is the key support level here, really, and that's what the fundamentals are supporting currently, Emma. Okay, as you can see though, the 20-day moving averages now is coming up to test that 4100 level. So a break of this range, this 4175 to 4100, needs to happen before we get another direction in the trend. But at the moment, the trend remains intact. We're above the 20-day moving average. We're above the 50-day moving average. It's all the way down there at 3985. So 4100 and then 4,000, but technically 3986 is where the 50-day moving average sits, and then the 50 and the 200-day then sits below 3950. Okay, so there are your three big lines in the sand on an end of day basis. So that's the daily basis consolidating. The 4-hour chart is also sort of sliding sideways. As that 4175 level, you see we haven't broken out of it significantly at all on the 4-hour time frame. And again, we were biased to the downside. We've come to February and we started to tick up, but again, it's running out of steam this time on the 4-hour time frame at the 4150 level. That was that yesterday's? Yeah, that was yesterday's CPI data. So we're sort of then continuing to track higher. But having said that, we remain above in the upper half of the Bollinger Band, although consolidating, slipping down. So the 4-hour trader has 4120 as his immediate support going forward today. The candles are getting smaller. Either the amount of distance the price is traveling since the CPI data is smaller. So wait for the open, see where we go from there. But support today is at 4120 level, resistance 4155, and then the top of the Bollinger Band sits just shy of that key daily resistance at 4175 at 417. Okay. MACD can't decide whether it's going up or going down, so it's slipped up. It looks like it may roll over. Okay, I think that's your time frame, isn't it, Emma? 4 hours. But anyway, let me know if it isn't. And the other one was the Dow. Now then, the Dow. Remember, fundamentally, guys, it's only 30. There's only 30 components of it. It's based on the industrials. It stands for the Dow Jones Industrial Average, the DIJA, the DJIA, the Dow Jones Industrial Average, 30. So it's 30 industrial companies. So it's biased towards more traditional businesses, and there's only 30 of them. So you can have a significant move in, 3 or 4 of those companies, and it can have a massive impact on the numbers that the index produces. Here on the 1 hour time frame, again, you can see the exaggerated volatility you can have. And that's why lots of people like trading the Dow on a sort of a scalping basis, minute, 2 minute, 5 minute. I quite like doing that as well. But here, you see on the hourly basis, we again another rally. Couldn't hold the 34,300 level, which has been our key resistance level to the upside here, 34,300 level here, this blue line here. And that one should be down at around 34,000, but 34,000 is where we are now, 33,989. So we've come down yesterday. We closed lower yesterday, and we've again another futures market that's sliding sideways at the moment. On your 4 hour time frame, though, Emma, we continue to sort of wriggle around. We can't. The highs are getting higher, but it looks like there's lots of volatility both to the upside and the downside. So we're in this fundamental, as you say, issue about the earnings have been weaker than expected. 23% drawdown in the S&P earnings. Similar situation for the Dow, although the Dow has somewhat outperformed because of the industrial companies, the less sexy companies, the cyclical companies tend to do better in recession times. So Dow's done outperformed somewhat, but it's really running out of direction, really. So as a trend following trader, it's all over the place. It's sort of up, it's down, it's up, it's down. It's still biased to the upside. The general stock level has moved higher, but it's not looking great, to be honest. So 34,300, we need a clear break over that level, which would take us back to January highs, 2023 highs. But again, it's got some clear support. So the support here on the 4 hours is here at 34,000 itself, where we've got the 50 hour and the 20 hour converging. Then we got the 200, sorry, it's the 4 hour, it's not hour, but that's moving averages. And the 200 period 4 hour moving average sits there at 33,700. Bottom of the Bollinger Band's coming in to meet that. So some distinct volatility, and we're still sort of biased the upside, but yeah, it's really running out of direction on that time frame. So if we go back to the daily, we can see that consolidation clearly here towards the end of January and this most of February. So are we running out of steam up here? Yeah, we need to break these levels, as I said earlier, if we're going to move anyway to the upside. Okay. Now then, where did I get to? We did, Emma. Thank you for that. Good morning, Samuel. Hello. Good morning. Hello, everyone. Majid, what's for the dollar index? Asked Majid. Well, the dollar index is bid today. The dollar's got its bit of its juju back today. So we've rallied this morning over the. We found support yesterday at the 20-hour moving average. Again, another big volatile session. Yes, let me zoom in. On the CPI data, look at this, all the way down here under 102, or down to 102.35 under 103, which has been 103 is not actually on here. 103 has been the big pivot area. Let's put that on there. No, object list. Sorry, I thought it was on this chart. The key 103 level. Through here, so we moved all the way down to 102.30 from highs at 103.40 yesterday, and then we've sort of held it since then. So we've broken higher. Dollars on the bid. We closed into the end of day yesterday, but then we've moved higher. We're over the 50-hour. We're supported by the midline of the Bollinger Band. We've rallied to 130.55, which is above yesterday's high. And if we just stick Monday's high, took us to 103.70. That's the next upside target as we trade at 103.45. On the higher time frame, there we go. On a higher time frame, no, we've obviously been descending. Dollar's been under pressure for November, December, January. We went under this, went to these 101 lows here at the beginning of 165 was the low we got to here at the beginning of the month. We've since bounced from there, but again, you can see very clearly on the daily time frame, we're supported by the 103 area, which is why I hadn't put it in. So for 1, 2, 3, 4, 5, 6, 7, 8 days, we've been over the 103 on an end of day basis, but we can't break over 103.50, where we are now at 103.40, although we've spiked as high as 103.75. So that's a very tight range, that 50 pip range there for dollar index on an end of day basis. So a break of that take us higher. But we are, the big leap we had at the beginning of the month, signal line started to rise, and again the MACD histogram here, very small, but it's breaking back over the zero line itself, so it's relatively positive. Let's see what retail sales shows us later today. Ivan saying he's not getting me very well. Ivan, have you tried reconnecting? Langer saying he can hear me nice and clearly. Samuel saying he can hear me nice and clear, and Bongani's also saying he can be nice and clear. Do we have support for 18.10.23 on US dollar? On gold. Let's go back to that. That's a question from GoToWebinar from Bogani is asking about, do we have support at 18.10 for gold? I guess you're talking about the 1 hour time frame. So 18.35 is where we are at the moment. 1800 is this, 1830 is the next big support. Now, really technically, that $10, I don't know what time frame you're looking at there, but that $10, if I go to the 4 hour, I don't see a 1810 support above the key 1800. Let me just make a 84. Make that a bit thicker so you can see it. That key 1800. I don't see 1810 for Ghani, but certainly 1800. But that's $10 further. That's quite a lot of pips lower, and pressure is to the downside. Certainly, first support is that 1830. Okay. Langer's asking about cable. Let's have a look at cable while we're there. So cable, another one. This is the daily time frame. Remember, we couldn't get over that 124 level. We had tested it towards the end of January, but again, another 8-10 days where we bounced into that high. It was only a 2-3 day high here in December. So that resistance is getting tougher, if anything. And then another one that reversed quite aggressively from its resistance level at the beginning of February. We've since bounced from a big move to the big psychological 120 level, and we're currently testing 122. So it's better, but we're still not in the upper half of the Bollinger Band. We're still under the 50-day moving average. So it's still looking relatively weak to me. And as you can see, MACD is also starting to, not with a great strength of move, but the histograms have been negative for about 8 days now, and the signal line is about to break, or it looks like is about to break under the zero line. Oh, you can't actually tell that on there. So be careful. A break of a clear, decisive break of 122 is required. on an intraday basis, there's 122 up here. So we rejected it again yesterday, even after the hoo-ha of the CPI. Sorry, it's got the 4 hour. The hoo-ha of the CPI here, and that was also the 200 period on the 4 hour time frame, 122. So we rejected that yesterday, and we've moved down ever since. So we've breached into the under half of the Bollinger Band on the 4 hour time frame, and we're now testing the 50 period moving average, and we've even broke under that. So that's negative, having rejected the 200 period, the 4 hour. Support from earlier this week takes us down to 120.28 on the 4 hour time frame, and the bottom of the Bollinger Band is just above a 120 at 120.10, and there's the big psychological 120 level. Say I can't emphasize enough the key 120 level for cable. As far as today's concerned, again, it's another weekday. Broke under the stickiness to the Bollinger Band into close yesterday. Moved lower, breached the low of yesterday earlier, and a big candle down here on the CPI data out of the UK this morning, having already breached the 50-hour moving average, under the 200-hour moving average, hung for an hour or two, but then gone down again. So we're currently trading at 120.66, and that looks weak to me. Next support, if we look to earlier in the week, as I say, took us through to this 120.40 zone from Monday. The low of Monday took us to that 120.11 area I talked about before. So it's looking like it's moving lower at Langer there. No more from GoToWebinar. I'll go back to YouTube. Next on YouTube is Joseph saying, I love you as well, Joseph. I don't know if we've met, but good to spread the love, my friend. GD can hear me. Very good. Samuel says, thank you all. And you myself as well. Lots of you in here today. It's great. Anita says, hello. Janet says, hello from Kenya. Hello, Kenya. We've got I don't know where you are in Kenya. We've got a seminar coming out to see in the crew on Saturday. So if you can't see us there, come to our Nairobi office. We're more than happy to help. Majid, we talked about this before, didn't we? That 17,890 level, certainly. And as I said, 1800, the big round 1800 is the next low. If that 1830 level is breached on an end of day basis. Mike, I hope I've answered your gold question, but you're on there. Let's just show you. There's that 1830 level, and there's the big 1800 level. You see, we're this is the 4 hour time frame. Not a great deal of action, but we are under the Bollinger Band. Let's sum it up a bit. Sorry, we are under not the Bollinger Band, the midline of the Bollinger Band. So the 20 period moving average here for 4 hour traders. The daily trader, end of day trader, he moved or tested the break of that 1920 support level at the beginning of February here, and the big leg down was the following day on the 3rd, and we've continued to move lower ever since as we broke 1860. So 1830 is the next big support, and then 1800 itself to the downside. Certainly that's down. The 4 hour is down. So any intraday trades, you've got to be careful. 1 hour is definitely down. So anything below 1 hour time frame, guys, you're very much against the higher time frame if you're going to take long trades on gold today. Good afternoon. Good morning. Good morning, says Chris. CPI data was mixed. Yes, it depends which one we're talking about. It was certainly mixed. And that's what caused that massive volatility yesterday. Markets weren't quite sure, you can see it on the gold chart, weren't quite sure how to take it. But overall, it's looking like a higher for longer. The Fed Fund futures rate that CME produced, which is where the real skin in the game is as far as the options and the futures traders are, they're now talking about the terminal rate over the 5.25% level. And there's bets on it, going to the next window, which is the 5.25 to 5.5% level for US interest rates. Maybe right, maybe wrong. It may have gone too high, too slow. Who will see? Remember, they moved very, very aggressively from March to December last year. 425 basis points very quickly. 25 basis points expected in March, also May, and possibly into June as well. Perhaps there's another 25 to come. But only time will tell. But what's the trade telling us? What's the chart telling us? Well, gold here on the daily chart is down, gold on the 4-hour chart is down, and gold on the 1-hour chart is down. So, you know, don't fight the trend. It's always been a mantra I've followed for many, many years. Paneth, good afternoon. Bassoon, hello, sir. It's nice to hear you healthy. I have some buy trades in US 30. Please let me know what you think about it. Depends when you bought them, Bassoon. But the Dow, as I said earlier to Emma, here's the Dow. Again, so fundamentally, it's consolidating really from a trend following point perspective. You can see it, you know, it can't get higher, it can't go higher. It's banged into this level, and the level is 34,300. It needs to make a clear break above 34,300 if this is going to go high. The Bollinger Bands here, remember the Bollinger Band, what they are there? The midline is the 20-day moving average, so it's very relatively flat. The blue line is the 50-day moving average, so it's rallied up here during the November rally, flattened in December, flat in January, and flat in February so far. So the the Dow Bassoon needs to break 34,300 to the upside. But conversely, it doesn't want to move down either particularly, so it needs to break 35,500, this line here, on an end of day basis to take it under the 20-day moving average and under the flat 50-day moving average. You know, so that's the support level. I mean, you could have it a bit closer, but really you can see that sort of consolidation. So it's not trending. As a trend following trader, I'm out of that. That's not telling me anything at the moment. That's not, you know, is it over? Perhaps too early to tell. What's the 4-hour doing? Well, again, the 4-hour is very, very choppy. There's no sign of it running out of steam. We've still got sort of higher highs. We got higher lows, but there was this breach here into the 200 period moving average on the 4-hour, and that's interesting. We did bounce off it very aggressively to produce new highs. This was yesterday's panic, or not panic, but reaction to the CPI data, where we took to 34,500 level I mentioned. But it didn't last very long, did it? It turned around very, very quickly, although it bounced very quickly. So again, intraday, there's a bit of support here at 34,000. Lower than that, it's, you know, very choppy. So be very careful. Some of these candles here, these 1-hour movements can be account breaking. So, you know, be careful, be on the right side of it. But again, technically, here the 200-hour sits through there at 33,954. And resistance today is where we are now, 34,000, then 34,085, and then really that 34,100 level, where the top of the bottom, but you know, lots of volatility going on. So as ever, be careful, trade with a stop loss, get out when you're losing too much, never lose more than you know, you're comfortable with, and you know, let your winners run. Let's go. Hello, Glenn. Good afternoon, hello, my friend. Andrew Gold. Well, I wonder if you know, I'm sure you're not the Andrew Gold from the singer from the 70s. His song is pinged out of my head now. But good afternoon, Andrew. I hope you're well. Vanessa, hello. PNG. Good afternoon, PNG. Hope you're well. Morning, boss. What is gold look about today? I'm on a buy. Well, you're against the trend, my friend, so be careful. If you just listened to what I've just said a minute ago, but let's have a look at the chart for you. Gold, that's down, my friend. I don't know where you bought it or when you bought it, how much you bought, but I hope you're not losing too much. But that is moving lower on the 1 hour. Well, let's see. I don't know. 30-minute doesn't, you know, it's well that 1830. Well, let's have a look. So here on the low of the day so far has been at 1831.50. So that's the low of the day. Okay, is that going to hold at the moment? That's what you want to be looking at now, really, the low of the day. If you're trading this intraday, let's go back to. So if I put that on as a, because it's that sort of dotted line. So that's the low of the day. So if you got in above 1831.50, you're sort of in the money. And we're at 1834. However, it's not, well, we'll see. You know, we've been out of it positive here on the 30-minute. We've been stuck to the outer Bollinger Band for 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, 10, 11 candles. A big one was our 9 candle down. Many people would have taken profit on that as we broke the low of yesterday, which was through here. Others, but that once that's broken, that's added to more sellers, and then we stalled here at 1835. Okay, so let's go down the time frame. I'm assuming you've got in at a lower time frame. So there's a bit of support here. There's at 1831. So 15 minutes is still trekking lower, but 15-minute trader, you know, you want to break over 1836.50 to take this higher. ABBA, my friend. 5 minutes. Again, sideways action. There's at 1831. Lots of sideways action. Looking positive. Dripped lower, but again, still anchored lower. So here, even on the 5-minute time frame, the MACD here, you see it's still negative. The signal line's flat. The candles are flat. You know, percentage R here is saying it's way over. It's spiking higher to, you know, looking to reverse here. This particular oscillator, how high it's got. But it needs to, you know, for 5-minute gold traders, you need to hold this break of 1835.45 and see if you can get to the next resistance, which takes you to 1837 on that particular. I'm going to put that on there. I've got an ATR on there. Yes, I have. So $1.25 is the 15-minute ATR at the moment. I think. Can you see that? There we are. There's that. There we are. So $1.20 is what you might be looking for if that's broken to the upside. Tato saying, it's a great question, that, my friend, Tato. Does indicators really work more than analysing the market structure without using indicators? Of course, it's what works for you, my friend. You know, market structure, you know, is key. You know, we've got these waves within waves. We got these impulsive moves. And, you know, that's another one way of trading it. Trade the price action. It's just, you know, I've always used indicators. They work for me. They have their pros and cons. Nothing's perfect, Tato, my friend. So find something that works for you. For me, I've always used Bollinger Bands. I've always used moving averages. I've always been a huge fan of the ATR. They may not click for you. They may not work for you. It's all about your time frames. It's all about the asset you're trading, understanding that. But principally, most important of all, and I say all the time, it's understanding yourself. So if you're not a sort of indicator sort of guy, a technical analyst sort of guy, you want a clean chart, you don't want any of these old-fashioned indicators on. Just look at the price action, whether it's candles, whether it's, you know, these bar charts, whether it's a line chart, simple end of price action line chart. It's up to you. What works for you, Tato, my friend? You know, that's the most important thing. The other thing to take away is that most approaches, most strategies, most systems are good enough. They work well enough. The problem is most people don't have good money management or good risk management. Get the two mixed up. Get taken over by their emotions, their fear and their greed. It's all those soft skills that the reason that most people fail, Tato. So, you know, yeah, absolutely. You just use pure price action. Clean charts. We're publishing something later today. Midweek update. Very, very clean charts. No indicators on. So have a look at that as well. So say, do something that works for you. And there's lots and lots of ways of skinning a cat, as we say in the UK. Michael, the guppy and gold. We're having a look at the guppy today. Pound yen. Where's he gone? Where's he gone? Oh, I can't see pound yen here. Quite a volatile pair, pound yen, remember. There he is. He's right at the it's miles away, isn't it? Michael, okay, so what's that doing? Well, that here, this 1 hour chart for the pound yen is positive from Monday, Tuesday. We went over 161.70, which is our resistance. Went over Tuesday's highs at 161.10, and we plotted a new high and closed just shy of that yesterday at 162. So the key big round 162. Let me take some of these numbers and lines out. Delete that. Don't need that. Delete. You've got 1 hour time frame. Let's make that the 160 level. Another big round number for pound yen traders. 160 here, and let's make that 162 as well. 162. Stick that in on there. So 162 is where we got to yesterday, stalled, and we've declined from that at the moment. Big down candle here on the 9 o'clock candle from the CPI data from the UK. And we're into the 50-hour moving average here on an intraday basis. So next big line in the sand is this 160 level. We're currently trading 110 pips above that at 161. Will we get there? Who knows? But that was interestingly, 160 was below our low of yesterday, which is 160.010. Having had a big strong rally on Monday up through the 200-hour moving average and the 50-hour moving average. We're now testing the 50-hour moving average, the bottom of the Bollinger Band, and also the 200-hour is coming up towards this 160 level, so that becomes quite a significant level. And you see here the MACD signal line is declining. Will the histogram and the signal line breach the zero line? We haven't yet, but we're moving down quite significantly. So going forward, we need to hold, if we're going to take this high, we need to hold 161 itself, and we're at 161.10 at the moment, and stay inside the Bollinger Band. Otherwise, we're going to sort of be biased down towards these lows from yesterday at 160 to the downside, Michael, on an hourly basis. The 4-hour candles have also run out of steam at 162, but they've got much further support. Our next support here is at just below 161 at 160.90, interestingly on the 4-hour. Then the 20 period moving average is at 160.25. Then there's the big round 160 itself, and then we got the 200 and the 50 period moving average converging at 159.25, say. So they're the three, 1, 2, 3, 4 support levels. Resistance remains the big stubborn 162 to the upside on the 4-hour time frame. On the daily time frame, we broke into the upper half of the Bollinger Band here on Tuesday. We went higher again yesterday over the 50-day moving average, which is interesting, but it's descending. And then resistance is at 162, obviously, as we said. Then the top of the Bollinger Band at 162.60, and then the 200-day moving average at 163.20. But again, this break there from the January high here needs to hold, which is a strong day yesterday. So if we can hold 162 to the upside, that looks like a relatively positive break. So from a move lower and a January low that took us under 156, pound has recovered quite well against the yen. Obviously, lots of news around both those currencies. You can see here the MACD is very, very flat. Small histogram bars and a flat signal line. It's not moving up nor down. So they're the upside targets. So a bit more bullish on an intraday basis than it is. Relatively bullish on an end of day basis. Intraday has shook out and looks like it's looking lower, but we'll see how that goes through the day. Michael, that's the time frame. If you want it any lower than that, let me know. Gold, everybody's obsessed with gold. Michael said gold. Cheetah said gold, as I said earlier. Let's have a look at it again. What's your name? Has come up. It's only fair. Gold remains pressured to the downside today and on the higher time frame. So, my old mantra, don't fight the trend. Where's it gone? There we are. even on the 5-minute time frame, it's struggling to get over here. But it's flat 5 minutes, 15 minutes, maybe finding a floor, needs to break over 1836, 30-minute. Finding a floor, but the next resistance is up there at 1842, so 1835 is our support. The hourly basis, nice big move down today. Thanks very much. Some pips bagged below yesterday's low at 9 o'clock in the week. Inflation data out of the UK here. This big candle here. Final support 1835, but the intraday low is 1831.50, as we said earlier. So may find some support there, maybe a few dollars in it, but it looks weak to me, my friend. Mohammed, euro again, euro, dollar, another one that's sort of trying to move. Let's go to the daily time frame. Trying to move higher, then it rejected it here as we were moving higher during November, December, January. Peaked out here at the end of January, beginning of February. We went to 110.35 on an intraday basis, and we've been lower ever since. So on an end of day basis, we're consolidating. We're trying to hold 107. We've been as low as 106.60 zone in February. There we are, 106.60 earlier this week. Interesting, it's our low for the month. It's been put in here. So if I do that, you can see. So today it's down again. It couldn't get to couldn't hold the 50 top of the Bollinger Band and the 200-hour moving average yesterday on all the volatility of the CPI. That's obviously tweaked that indicator. We've got resistance today there as the 50-hour and the 20-hour coalesce at 107.25. So if we hold 107, which is our support here, which we have done, which we did yesterday, and again this morning, a quick brief test into it, that's okay, but again, we've weakened. We need to set 107.25 to take this higher, Mohammed. Then we'd run into today's high and the 200-hour moving average at 107.40. Top of the Bollinger Band is just above that, 107.45, and then obviously you can't not count yesterday's spike, but it's a long way away, isn't it? All the way over 108. So the real sort of end of hour close after all the fuss is 107.60. So that's your next resistance zone there above these three levels here to the upside. To the downside, obviously the big 107. Before that, we've got the bottom of the Bollinger Band at 107.5. So there's a little 5-pip zone there. But if that breaks, there's a lot of fresh air. Takes us all the way back down there to 106.54 from Monday. Okay. Right. Another question over on GoToWebinars. Bear with me a second, my friends. Pound Oz asks Olibango. Olibango says pound against the Oz. So I've got this here. Pound Kiwi, pound Swiss. This is pound CAD. I've got pound Oz. I don't know if I've got pound Oz here. I've got to a different setup. Pound. I've got pound Oz. Olibongeng, that remains relatively bid. Interestingly, we rallied to 175.50 this morning before we had a turnaround. This was the week. Here's a good example of intervention by central bank. This is the weakness of the Aussie this morning from Mr. Lowe's intervention. So pound Aussie here rallied from this under half of the Bollinger Band at the 50-hour moving average. Big old rally on comments from Mr. Lowe and the gloomy outlook. So pound against the Australian dollar rallied quite nicely. Where did it stall? Sorry, I was just going to show you. A classic stall at 175.50. It was a high we'd taken back over here. So we'd broken high. Looked pretty positive, didn't it? Because it was above last Friday's high. It was above yesterday's high. And it was looking pretty good at this point, wasn't it? And then all of a sudden the UK data came out. CPI weighed on sterling, and we're down very significantly. So big engulfing down candle, twisted top form there, but it really hasn't moved much lower than that, and we're still hanging on to 175 itself. So 175 through here, actually where we are now. 175 there, which is where we bounced it. So it's sort of holding on to that. So it's still biased to the upside on a end of day basis with a 75 pip target to the upside. Sorry, it was. I'm talking about the euro guys here. I'm talking about the pound Aussie for Oberlengo over on Joshua, so people don't get confused. This is the pound Aussie for Oberlengo over on the GoToWebinar platform. So 175 is the key support. Big support at that 174.70, where the Bollinger Band is the 20-hour Bollinger Band, and then the 50-hour Bollinger Band below there. You see this? Now it's nicely aligned. It's still positive because we've got the 200, the 50, and the 20 all in alignment. They're starting to turn up from this flatness we've had. You see they're starting to angle up. The top of the Bollinger Band has moved higher. The bottom of the Bollinger Band is moving wide, and also some more volatility perhaps to come. But that's the level to the upside you want to be looking for today. Bugani's got a follow-up question. Can you explain what happens when the markets have a gap? I'm looking at pound dollar on the daily chart between the 3rd of the 2nd and the 6th of the 7th. That's the weekend, Bugani. Okay, so the 3rd was is that the weekend? I'm saying it's the weekend. You're talking about the 3rd to the 6th. The 3rd, yeah. So there's the 3rd. You see, my friend. And there's the 6th. So what's happened? There's been weekend activity that's affected both sterling and the dollar. So the market is opened either higher or lower. Okay, so if you don't normally see that on a day, I don't know what platform you're looking at it on, but let me go back to the cable. Okay, so you've had weekend news has affected the market, which is why lots of people close out their positions on a Friday night. Obviously, also there's cost of holding trades over the weekend, 2 days. So if you look at the daily time frame, I don't know what gap you were talking about, but there's the. Let me zoom this up. So we'd had 2 big down days. So you're talking about the 3rd and the 6th. So this was the beginning of the month. We'd closed 1st of February relatively okay. We were still in our channel between 124 and 123. So we were sort of hanging on to that 100 pip channel we'd been into for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 days. And then all of a sudden we decided here on the Thursday, the 2nd, ahead of non-farm payrolls on the Friday, that this is going lower. Big down candle engulfing all a lot of the previous action in that channel. Rejected 124 for the last time, broke the key 123 support and closed the day at 122.25. The next day, non-farm payroll was the 3rd. More pressure to the downside, more bid on the dollar. We went down again, breaching the 50-day moving average, bursting out the bottom of the Bollinger Band, and we closed the week at 120.45 with the big psychological 120 screaming at us. And that's what happened as the week materialized, not on the Monday, but certainly on the Tuesday. And then we bounced off that since. The gap you're talking about is here. So that's suggesting even more weakness on the Monday. But by the Tuesday, and certainly price action on the Monday closed the gap, but as far as the candle body is concerned, Bugani, it was the gap itself was closed there by the Tuesday as we bounced off the inevitable test of 120. I say, and that's what's happened since we now moved up, and there's no gaps on the chart. But gaps occur when there's news, typically over the weekend when the market can't assimilate it, and we move from a position that's worse or better than when we closed on Friday, and that's what gaps are. There's a whole webinar. There's different types of gaps, technical gaps, and there's different ways of trading the gaps. Most of them get filled, we say watch the webinars on our website about filling the gap. Just bear with me a second. On that. So there we go. What were we talking about? We were talking about sterling for something, weren't we? No, sorry, that was Bahani. Bahani, I hope I've answered your question. Next up is Dalio, who's asking about dollar yen. Again, another one that's been impacted by some fundamental news. Obviously, we got the gossip earlier in the week. In fact, last week it was, wasn't it? So we are Wednesday, Friday. We're talking about that Mr. Abenyana, the deputy chair of the, or deputy governor of the Bank of Japan, looked like he was going to be promoted to the top job. And we had this expectation that he was going to be less dovish than the current incumbent, Mr. Kuroda, and other members or other people that were in the frame. That was very quickly turned on its head, and we then had an announcement, in fact, an official announcement on it overnight, that Mr. Udia, who was an unknown, really, he's a well-regarded professor of economics, and he's well-regarded, particularly in the United States, for his economic nous, will become the new head of the Bank of Japan. But he's taught that the government and himself, he hasn't actually made he hasn't made an official speech yet. Obviously, he hasn't been appointed, and Mr. Kuroda doesn't retire until the end of March into April. Suggests that he will follow this very loose policy, or perhaps it'll be less loose than it is. There was hope that the yield curve control might change. So we went all the way down to 130.50 here on Friday. In fact, we went lower than that, didn't we? We went under 130 itself in the hoo-ha. But since then, we've been in this up half of the Bollinger Band. We've rallied, obviously, the fuss yesterday over the CPI, but there was still buys to the upside. So we've rallied, retraced. The 50-hour has kept us the right side of this move up. Dipped under half of the Bollinger Band, but kept in the Bollinger Band. Then the volatility from yesterday's CPI data held, and we finished higher for the day, finishing over 133. Interestingly, retraced a wee bit in the early hours of early Asian trading, but only as low as the 20-hour moving average. Now we've bounced off that since, and we're moving higher. 133.45 dollar yen trades at the moment. This Fibonacci level, I hope you can see that Fibonacci level there, Dolio, comes from this big decline that we had. Whoops. This big decline we had from this rally to 150 in October to the decline all the way to. Hang on, where's that one? Oh, it's a weekly one, isn't it? Sorry. The rally we had, not decline, the rally we had from the lows here of 2022 to the highs of 2022. So all the way down here from this normalized area where we've been for years, still above 110. So the 2022 level has been retraced quite significantly, and that's why that 50% is. That's the weekly Fibonacci level for the 2022 move from down here at 112 area to all the way to 150 area for dollar yen. Massive rally for the dollar against the ever weakening dollar yen during 2022 before it turned around in the final few weeks of 2022. So this 50 line here is a key high level Fibonacci level, and it sits right on that 133 level. So it makes that 133 level even more significant. And as you can see, yesterday and today we've breached that to the upside. Okay, small candle yesterday. Obviously today isn't complete, but again on an end of day basis, this is now or has been positive all of February because we've been in the upper half of the Bollinger Band. But we've been running into that resistance level at 133. So we're over 133 at the moment. Can we hold it? Let's see. Next line in the sand is back to the 38.2 level and the 200-day moving average at 136.80 to the upside. So they're your big upside targets for dollar yen. Remember, these are the retracement levels and Fibonacci levels. So On an end of day basis or a 4-hour basis, but again, we're over that level there. You see we're over 133, so 4 hours moving higher. Closed higher yesterday after the fuss of the CPI. There's the support. 50 period crossing the 200 period, that's positive. Nicely aligned, 20 moving up, 50 moving up, 50, 200 flat. Signal line and histogram's positive. 1 hour also positive from the CPI yesterday. Back to test, as I said, and we're up 133. So that's all positive dollar yen moves at the moment. Where do we go from here? Well, 133.50 needs to break today. Then we'd need to break the top of the break, test the Bollinger Band, which is just 5 pips higher, 133.60. The 4-hour top of the Bollinger Band is a bit higher, obviously. So that has stretched to 133.80 is next level. So 133.80, 133.60. And on an end of day basis, we're right on our Bollinger Band there. So, there's a lot of fresh air up here. If we can hold the 50-day moving average, there'll be a 100-day moving average through here somewhere around about 135, I would guess, is the next upside target on an end of day basis. And again, those of you with sharp eyes can see the signal line been rising nicely from the beginning of February, and the histogram now is currently today. You can't make a decision on that because it's incomplete, but we're popped over the zero line for the first time since back here on the 9th of November. Okay, so that's relatively positive and big to the upside. Ayanda, the S&P 500. So again, sideways. This is the we've got the daily. Daily is still, relatively positive. As I said earlier to Emma, the key support is 4,100. 4,100 is your end of day support level, but we do need to break 75 points higher than that on an end of day basis for this to go higher. 71.45 is the big line in the sand. We haven't been able to break on the S&P 500. But equally, we don't want to, currently in February, don't want to break below and close below 4,100. We did earlier in the week, last week, but we're still holding the 4,100 level. The 20-day moving average here on the S&P futures is at below the 4,100 level at 40.90. Next support below that is the 50-day moving average, which sits at 39.85. Okay, so the 4,000 level is obviously key between that and the 40.50 level, which is where we spiked to on an intraday basis, is the next level. So they're the key spots. So big round numbers: 4,100, 40.50, and then under 4,000 at 39.80. To get higher, the only line in the sand is 4,175 on an end of day basis. And yeah, again, I don't know what you're trading at, but we were down yesterday. We're down currently today. 4-hour ran out of steam at that 41.50, as we said earlier. There's the 41.75, and on an hourly basis, ahead of market open, there's our 41.55 from our 4-hour. There's our 41.75 from our daily. We're really stuck there at 41.30, and there's our big support, 4100 itself. Stuck. I say stuck. It's just that all the moving averages are consolidating around this 41.30 level. We've got the 200, the 50, and the 20 all within a few points of each other. So directionless really there today. See what the earnings numbers bring. Remember, we have some disappointing European earnings, some relatively disappointing US earnings as well. Gold asks Jeremy, gold asks Samantha, and gold asks Imran. So let's just I'm running out of steam, guys. Anybody else asking about gold? No worry. Gold. Sampler asked about gold, and Jiram asked about gold. So for the final time today, I'm not going to mention it again. Gold remains weak today. There's the 1 hour. It's down 81.50 sorry, 18.31.50 is our low for today. We bounced off that a wee bit. We're $4 to the upside on that, but the 4-hour is in two big down candles. The daily is in a downtrend. We're under half the Bollinger Band. We have been for all of February. We're under the 50-day moving average now. I was looking at a different chart before. I was looking at the Ichimoku chart, and the gold candles on the Ichimoku are banged. They've been above the cloud, but they're banging right into the cloud at the moment. So that's a negative, still positive, but that's a negative sign on Ichimoku as it's banging into the cloud, hasn't it? It's burst into it on an end-of-day basis. But we've been down here on a certainly from this big candle here on the 3rd of February for gold to the downside. Today we're down. Again, depending on what time frame you're trading it on, even the 5-minute earlier was still negative. They're struggling to get up. It's directionless, really. It's trying to break higher. But if you're trading this on a 5-minute chart, you want to get above 18.36 now to look positive. But it still remains negative here on the very flat here on the RSI at 50. Signal line very flat. So not a lot going on there. Gold. Wait for the retail sales data in an hour and a half, I would guess. So be careful, you gold traders. Hopefully you're short. Pound says marvelous. We saw that before. It's been weak today. Can't get over 122 on an end of day basis, and it's got support at 120. So a 200 pip range on an end of day basis. There's the 50-day moving average at 122 to the upside today. There's the 200 period on the 4-hour at that 122 level. Rejected that yesterday after the US CPI data, and we've turned lower this morning on the week CPI data from the UK. Next level on the 4-hour is 120.36. We're currently at 120.58. So 120 here, the dotted line is calling the bottom of the Bollinger Band. And on yesterday, yesterday we went as low as 119. No, that's not yesterday, is it? What's that? That's the 7th of February. The February low took us to 119.60. So our nice trending lower break here, there. Thank you very much. We were short initially there, added to it there, added to it again there here on the CPI data, and we've moved lower, looking for the low down here, just 19.20 down on a 1-hour basis from Monday for cable. Okay. Good afternoon, Ghana. Peter, good afternoon. Hi. And finally, Mohammed, Mohammed, you asked that earlier. Hopefully, I know you're asking again, but we looked at Euro, didn't we? When did you put that question on? 57, is that 38? Yeah, it was 45. We've looked at that since then, Mohammed. If not, stick it on again, Mohammed. And Pro Reach, hello, hope you're well. But let's finish with the Euro ahead of the US retail sales in about an hour and 20 minutes. Euro continuing to hold the 107 level at the moment, but sideways action. There was the hoo-ha from yesterday's CPI. So 107's key support level today. If it's going to go high, it needs to breach 25 pips above that at 107.25 to get into that upper half of the Bollinger Band on an end of day basis, on an end of hour basis, and then 107.40, and then top of the Bollinger Band 107.45 to the upside. That's Euro. I'm going to leave you with the Euro because my voice is going. But any more requests, stick it in the box before I finish my final few slides. I'm over the hour at the moment. So thank you for your time, everyone. Let's say if you've got any more, please do let me know. But tomorrow we've got pivot. No, we haven't. That's from last week. We've got Fibonacci theory. One of my favorite. We had a look at that brief retracement level there on. I can't remember what it was now. Was it gold? I can't remember. But Fibonacci theory with Otto tomorrow. Next Tuesday, I'll be looking at multiple time frame analysis. So combining multiple time frames, higher time frames, lower time frames, and trade the middle one. So if you're going to trade a 1-hour time frame, what's the daily doing? What's the 15-minute doing? That sort of thing. And we'll look at some maths that's involved in creating these cycles, these waves within waves, and the sort of time frames and the number of candles you should be looking at. It goes all the way back to Dow theory. But multiple time frame analysis next Tuesday, the 21st. Live analysis every Wednesday. Remember, Andrea will be running it next Wednesday. We finish the month with the awesome oscillator on next Thursday with Otto, and then the following week we come to the end of the month. We're putting together our March webinars, ladies and gentlemen, this week. So do let us know if there's something you want us to include in our March webinars. These go-to-webinar ones, these fixed ones that are recorded. You get a copy of the recording. They're up on our website as well. So do let us know. But we finish on Tuesday, the 28th, with the very important COT report. If you don't know what the COT report is, the commitment of traders it stands for, join Andrea on the 28th to find out. But if you want a particular asset or a particular technique or a particular thing as a topic for our webinars, do let us know, and we're happy to add them. We're here to help, basically. So if there's no more questions, no more requests, I'm going to wrap this up as I'm 10 minutes over time. So I apologise about that. And where am I? Yeah. So leave you with my books. That's my favourite book of last year. I've got it here still. Tom Hugard's Best Loser Wins. Why Normal Thinking Never Wins in the Trading Game. Those of you on over on Restream can probably see the me with the book here. But yeah, fascinating, but I'm saying simple. It's very straightforward, but you've got to change your mindset, which is what I've been talking about a long time. And Tom's a big advocate of that. Used to do a job, bigger job than I've got here for City Index for many years, and now he's been trading himself since 2009. He left City Index. But, anyway, if you're brand new, particularly to Forex trading or volume trading, I recommend Anna Cooling's Forex for Beginners book, 10 years old now. So have a look at that. So anyway, take care, everyone. Any questions? The quickest way of getting hold of me or any of the team is webinars@hfm.com. Send an email to webinars@hfm.com. Support guys will pass it on to us. Follow me on Twitter. It's HF_analysis on Twitter. Lots going on Twitter. And it's Stuart Cowell on Facebook. Look for my HFM one, not my private one. I won't respond to a private one, a request. Okay. So take care, everyone. Stay safe, and we'll see you all again tomorrow. All the best, everyone. Bye-bye.